what it costs. Yeah, I hit the ground and I go off. Yeah, hit the ground and I go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Is up, everybody? Happy Thursday. This is the morning show here on Stock Market TV. I am Spencer Israel. Are we live? Yes, confirming we are live. Okay, what's up, everyone? We got a lot to discuss, and we are already running a minute or two behind. We can't be doing that. We can't be doing this. We got earnings, we got news, we got monthly charts, so many things going on. Perth Toll is our guest today at 8:50. She's lovely. Can't wait to talk to her. And then Sean McLaughlin will join us a little bit later on in the show. You know what to do. Hit that thumbs up. Brace for the intro and wake your neighbors up because it's time. You know what it's time for.
Good morning, Mr. Spencer Israel. How are you?
Hey, good. How are you?
Welcome to day 2 of the most bullish 3-month period of the year. Strazza, welcome to day 2, brother. How's the most bullish time of the year treating you so far?
Hasn't been treating the market too good.
It hasn't. Let's see. We are now day 2 of the most bullish time of the year. I think Dow futures in total are up somewhere in the neighborhood of 500 points or something like that. Are you not entertained?
So it's not a little bit more precise than that. It begins November 1st. You sure?
Yep.
November 1st.
Best 6-month period of the year starts November 1st, going back to 1950.
Well,
that's what Jeff Hirsch would tell us. Not the end of October.
Well, listen, it depends on how you calculate it. Like if you just take every year since 1950, right? Mm-hmm. Every single dollar made in the history of the Dow Jones Industrial Average going back to 1950 has been made from November the 1st through the end of April. So in other words, every year since 1950, if you would have bought the Dow on May 1st and sold it on Halloween every year for the last 73 years, you wouldn't have made any money.
I thought,
fun fact.
I thought the seasonality was like the support and resistance lines, right? You draw them, it's in crayon, right? It's a general area. It's not a specific hard.
That's right. If you take all the pre-election years, the bottom of the market, the strength should start at the end of September. The new lows list peaked on October the 3rd. So, you know, you can argue any way you want, but just keep it simple, stupid. Look at the math. The best 6-month period of the year started yesterday. And like I said, every dollar made in the Dow Jones Industrial Average going back to 1950 has been made during the months of November through April. Not a single penny was made from May through Halloween.
That's not true, but that's not true when you account for total return and dividends. So it can't be.
Move on.
That's dumb. Spencer.
Move right along.
What do you mean it's dumb? Okay. That's dumb. Okay, but I'm right though. Okay, anyway,
let's go Rangers.
Where should we start? JC, great call last night. You're getting some props in the chat for that. If you missed it, I don't know why you missed it. The monthly conference call was actually widely available. It was open to the masses for the first time in how long? A long time.
A few years, actually. I don't remember it's been so long since we opened it up to everybody that I actually don't remember the last time we did that. We used to do it like a few times a year, maybe once a quarter, maybe twice a year, something like that. This was way back in the day, like 16, 17. This year, I don't know. For whatever, I don't even have an answer.
Can the video be rewatched on YouTube or no? It can't.
Not on YouTube. You cannot. But maybe I should put it there. I did just drop the link to get the replay in the chat. So it's right there in the chat. I'll put it on screen if you guys want, but it's in the chat for everyone right there. get.awesometrust.com/conference call. Sign up. Okay.
I enjoyed that very much, Spencer. You did a nice job, chiming in with some questions. I thought that was good, right?
Thank you. Yeah, I mean, I think I'm over Vimeo, but we can move past that. Let's move on to state of the markets.
Please.
All right.
Please. All right, guys, for me, it's very simple. the catalyst has been for a long time. I mean, I feel dumb just saying it again, but people keep fighting me on it. And people have been fighting me on this for years. And anybody who's fought me on the catalyst for the stock market has been proven wrong. And it's not so much that I'm right or like I have like this like magic indicator. It's just math. When the dollar is under pressure and selling off, stocks go up. Period. When the dollar is strong, stocks have a hard time going up. Period. You could tell me about the war and the Fed and the Yellen and the Trump and the inflation and blah, 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 blah. It hasn't mattered. It doesn't matter. Nobody cares. So I don't either. It's really that simple. And a funny thing happened on October the 3rd, ladies and gentlemen, which is a month ago tomorrow. The dollar stopped going up. Ain't that something? Ain't that something? Dollar stopped going up a month ago tomorrow on October the 3rd. And a funny thing happened at the same time that the dollar stopped going up. Stocks stopped going down. Yes, that's right. The new 52-week lows list peaked the same day that the dollar peaked. Some people tell me that that is just a coincidence. I do not think that that was a coincidence. That is the way the market behaves. In fact, the day the dollar bottomed in July, as you can see here, is the day that the new 52-week highs list peaked. Again, not a coincidence. So why don't we take a look at what's happening at the index level? Because you see what happens, folks, is that humans are lazy as hell. They would rather defer to an index to tell them what the market is doing versus actually taking the time to see what the market is doing. It is a market of stocks. So if you think that stocks have been going down over the last month, maybe you haven't taken the time to count how many are going down versus how many are going up. My suggestion would be to either take the time to actually see what stocks are doing or find someone who does and get their notes. And that could be us, because we do that, obviously. It could be somebody else. It doesn't matter, right? Find somebody who actually does take the time to look at the market versus just being lazy and looking at an index, one index or three indexes or whatever. I highly, highly encourage you to do that. There's a reason why investors are always so confused, because they're being blinded by the indexes instead of seeing what's happening underneath the surface. Now, why don't we skip to the indexes so we can see what's actually happening now while we've seen improvement underneath the surface at the stock level. Now, what do you know? It's showing up at the index level. Why don't you pull up slide 2 there, Spencer? Show the Dow Jones Industrial Average here. And what you'll see is that the market here, the Dow bottomed in early October, right? At the same time that the dollar peaked. And then the Dow went on to make new lows, maybe only for a couple of days, but new lows nonetheless. You know what didn't happen as the Dow was making new lows? You did not see more stocks making new lows. In fact, if you take the time to count the stocks on the New York Stock Exchange, which, by the way, is the most important stock exchange in the world, right? There might be other important stock exchanges in other planets, but here on Earth, it's the New York Stock Exchange. And if you look at the stocks on that exchange, you'll notice that fewer stocks were making new lows. The majority of them bottomed a month ago. Why don't you look at the NASDAQ? What do you know? The NASDAQ put in its low in early October when the dollar peaked. Then the NASDAQ 100 went on to make new lows, granted for a few days. But you did not get an expansion of stocks making new lows. And now we're back above those levels. And the way I learned it is that from failed moves come fast moves in the opposite direction. This is a lesson I learned from the homie Brian Shannon back in like 2005. I Can't believe it's been almost 20 years, which is crazy. Time flies. My suggestion, folks, is to take the time to see what's happening underneath the surface, to recognize the correction we've seen over the last 3.5 months or so is perfectly normal for this time of the year. In fact, if the market was not correcting over the last 3 or so months, that would actually be very weird, very strange, very unusual. But no, the market corrected perfectly normally. And now, if you studied history, and my suggestion is go back and study history, technical analysis only looks at the past, JC. It only looks at information from the past. Yes, that is true. Us mere mortals who only have information from the past are forced to use that. And I encourage you to. And if one of you out there, one of you smart asses out there can find me some information from the future, well, I would be happy to take a look, right? But I still don't have any. So if one of you magically can find some of that, please let me know. And I'll take a look at it with you, right? We're forced to look at information from the past. My suggestion is you study prior cycles. You study past bull markets and bear markets. Study them all. The data is available. It's free. Go back and study them. And you'll notice that what we've seen this year could not be more normal, right? Right around midterm elections, stocks tend to do real well after that. And guess what? They did. We had the best 6-month period in the history of the first 6 months in the history of the NASDAQ, right, this year. Stocks did great. And in the third quarter of the pre-election year, stocks tend to correct. And sure enough, we saw that. And now we are entering yesterday. In fact, we entered the most bullish 3-month period of the year, November through January. The most bullish 6-month period of the year, November through April. And we're right in that sweet spot right now. So like I've been saying since last week, I am taking full advantage of just how scared people are, telling me about a crisis, right? There's a crisis coming, JC. The crisis is here. I think the only crisis is in the portfolios of the shorts that perhaps overstayed their welcome. And one thing that you'll learn by studying past cycles is that in bull markets, you don't want to overstay your welcome if you're short, right? Get in, get out, knock yourself out, go for it. But you got to be quick. You got to be quick. And I think that that's what we saw. And what's really interesting is that sentiment got, man, look at the National Association of Active Investment Managers getting incredibly oversold in terms of pessimism. Consumer sentiment, Michigan stuff, the Michigan consumer sentiment stuff still down near washout levels, even with the historic rally that we got from last year, still haven't gotten higher. So some of the sentiment stuff is near the middle. Some of the sentiment stuff is pessimistic. When you add them all up and put them all together, our sentiment composite points to opportunity currently versus risk. So that's how I see it. I think you can do a combination of two. Strazza, this brings us back to the same dilemma that you and I have found ourselves so many times. Are we buying the relative strength, or are we buying the ones that corrected the most for rotation and catch up? I think you can do both. I think you can do both.
I think it's one of the best questions an investor or analyst could ask themselves. We ask ourselves this all the time. High level, I think for most people, you don't need to make investing or trading any harder than it already is. You stick with the leaders. And right now, that's just big cap tech still. These stocks look so good. They're rotating so constructively. Google gets hit. Microsoft and Amazon make new highs. And that's why the NASDAQ looks the way it does. And then the average stock index, like the value line or the Russell, looks the way it does. So it's a very bifurcated market. And
Microsoft 3-month highs yesterday.
Microsoft looks great. Yeah. But you do need to be careful in such a thin market, right? You can't just go out there and buy anything. There are some real nasty downtrends in a lot of these individual components that you really want to stay away from.
I think that if you define your risk well, I think there's opportunity in these crappy names and not even crappy names, by the way, not even crappy names. These are names that are in long-term uptrends that have just corrected. So it doesn't even, I'm not even saying dive into the crappiest names. Like There are names
question. It goes back to that question, right?
like Archer Daniels Midland, for example.
Yeah, we put a trade on that one. We're buying those lows.
That's what I'm saying. So
Because that for me is more of a commodity super cycle play, where if this really is a commodity super cycle, Archer Daniels Midland isn't completing some massive top. Those things just aren't happening at the same time. So I think that's an interesting one. And there's others. Mosaic, John Deere's really been hit hard. Just go flip through those Moo components. I was doing it yesterday. I think we were talking about it on the call.
throw slide 2 up there, Spencer. I think this is a good example of a longer term uptrend. Big base breakout. I mean, this thing went up. This thing was a 3-bagger in what, a year? This thing was a 3-bagger 2 years. 2 years as a 3-bagger. Okay, off the 2020 lows. 3-bagger. Now it's consolidating, and we're at the lower end of the range, right? And forget that it's Archer Daniels Midland. Forget it. It could be a tech stock. It could be software. There's a lot of other charts that look like this, right? I don't necessarily have a problem with buying this against those lows. Like if Archer Daniels Midland is above 70, I got no problem owning this. So you're not necessarily buying short-term relative strength, but you can argue longer-term relative strength, right?
Yes. Yeah. It looks like most commodity stocks, right? They had a great run off the COVID lows, and then it's been sideways as much as 2 years for some of them.
What do you think about dollar index futures getting the shit kicked out of them? How do you feel about that, Strazza?
I think this wouldn't be the first time that the market makes a knee-jerk reaction to the Fed and then reverses it the following day.
Got it. So you think we close in the red today in the Dow and the dollar rips?
Closing the red in the Dow, stocks should be up. No. I think dollar is indicating lower, right? That bull flag looked like it was going to break higher.
I got to tell you, that bull flag
coming out.
That bull flag's that quote unquote bull flag in the dollar has taken a lot longer than bull flags in my experience take. And when these bull flags take that long,
not true, JC.
It probably ain't that.
No, it's taken 1 month, and the standard bull flag is several weeks. So it's been about 4 weeks. That's pretty textbook, isn't it?
No. I don't think so.
Okay.
It's taken. I mean, I thought that it was taking a long time before this week. I was like, man, this is taking a while, and it keeps taking longer and longer and longer.
Okay.
And I understand that emerging markets have a 0.0% weighting in the dollar index. I understand that, but emerging market currencies have been rallying over the last month.
Let's see it.
We're seeing, like I just said it. The emerging market currencies have been rallying over the last month on an equally weighted basis.
Talking about Dixie.
I know. But if you're talking about Dixie, you're just talking about euro. And a little yen, which ain't helping matters.
Problem is, these emerging market currencies just are so insignificant. They're not material at all. There are no markets for them outside of their local markets. People aren't running around trading Thai baht for fun.
You don't think that the bid in emerging market currencies is evidence of some kind of risk appetite, or at the very least, a lack of risk aversion?
It's nice if that's in place, but it's like seasonality. I wouldn't overthink it.
It's not so much that it's nice, is that while the dollar index has been quote unquote strong, you're seeing the dollar very weak relative to emerging markets. That's all I'm saying.
Listen, you want to talk about bullish things today? There are bullish things that we can talk about and point to.
And emerging market currencies rallying over the last month in the face of a stronger dollar index is one of those.
There's been an earnings onslaught of positive pre-market reactions this morning. A lot of really specky growth stocks, a lot of ARKy stuff, and they all seem to be reacting higher.
By the way, AMD up 10% yesterday. My understanding is that AMD is a big deal. Is that true?
That was such a big tell. Yes, that was a really big deal. AMD is one of those stocks you look at as a barometer for the broader industry. Semiconductors, obviously very important. to see the stock rally just, steadily throughout the day, I think was some really bullish action. And then you're getting just a ton of bullish reactions here this morning in stocks that you kind of needed to see some bullish reactions from: Shopify, Roku, Palantir, SoFi. So we should talk about them.
This is off topic, but the most viewed video on our YouTube channel is a clip from Animal House with Dean Wormer saying 0.0. And I've always wondered why that's there. And now it just hit me. It's because JC loves saying 0.0. He loves acknowledging when a certain sector or industry group or whatever has a 0.0 weighting in some random index, right? Like, he just loves saying that. So I've always wondered how that video got there. Now I know. Okay.
Mr. Spencer.
He also loves Dean Wormer.
Shorting stocks in bull markets is no way to go through life, son.
Okay. Let's bring on today's featured guest. We do have Parets here. She is the founder of Life and Liberty Indexes, which is an index provider, and the sponsor of the Freedom 100 Emerging Markets ETF, ticker FRDM. And you guys ready? I'm bringing her on.
Please
do it.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hi, Perth.
Hey guys, thanks for having me.
Of course. You and I, you, me, and Strazza were having a nice, lovely conversation about ETFs recently, about a month ago or so, and it was so good. And this is a subject that's certainly near and dear to both me and Strazza, I would say in particular, Steve. But I think it's a great conversation for the audience to hear. Perth, why don't you share with the folks the genesis of the ETF? This ETF needs to exist. Like, that whole thought process. I love that.
Yeah. Explain what it is you're doing. It's really unique and cool. So tell people what you're doing with your funds.
So, as you guys know, in emerging markets, especially kind of in the index space and in the ETF and fund space, which track those indices, there's a lot of autocracies just due to the nature of emerging markets, the universe. It's China, Russia, Saudi Arabia, Egypt, Turkey, UAE, so forth. So you have a lot of kind of just autocracies in this space. And when you market cap weight, which most indexes do, you end up with a lot of autocracy concentrations. So you have a lot of kind of autocracy drag. We've seen kind of China be a drag on the returns in emerging markets for a while now. We saw Russia's market go to zero. And some of these things are just kind of highlighting the autocracy risks that exist in the emerging market space, especially when it comes to indexing and these types of funds. So what we do instead of market cap weight is we freedom weight the emerging markets. And that just means we're taking third-party quantitative freedom scores that encompass, we use Cato and Fraser's Human Freedom Index and data set. And that is a measure of a combination of 82 different variables encompassing personal and economic freedoms. Because we believe that these freedoms are what sets the foundations for growth and innovation in the long run. And in addition, that these are the countries that have the stronger institutions, stronger rule of law, and stronger protections for both personal and economic, freedoms in their markets. So they're more resilient, they recover faster from drawdowns, they use their capital more efficiently, and so forth. So these are kind of the markets where we expect to find tomorrow's growth stories instead of being stuck in like the growth stories of the past. So we see them wait. Yeah.
So it's not as simple. You're not just saying, oh, this is a communist country, we're not going to include those stocks. You're actually finding the most free market countries. And then
exactly. Because we believe that, the freedom matters for, the growth in the country. And that's the foundational basis for growth going forward. So these are the countries, especially in indexing, you just want to find the next big growth stories. And so this is where we expect to find them.
And you said Cato Institute and somebody else, they do a pretty good job with ranking.
Yeah.
Okay.
So the Cato Institute and the Fraser Institute have a combined metric of personal and economic freedoms. You can break this up into civil, political, and economic freedoms. So civil freedoms are things like terrorism, trafficking, torture, wars, internal organized conflict, or causing wars in other countries. women's freedoms are in these. And then political freedoms are things like judicial independence, rule of law, civil procedure, criminal procedure, freedom of speech, media expression, religion, assembly, and so forth. And then economic freedoms are things we're all more familiar with, like taxation, business practices, regulations, freedom to trade internationally, soundness of monetary policy. You talked about currencies before I got on here, and currency risk is high in emerging markets, but we tend to be in the markets that have lower historical inflation, so it even diminishes a little bit of that currency risk. So these are the kind of things we're addressing.
Because it's the less free countries that have the currency devaluation issues typically.
Exactly.
So let's talk about the results here. Let's jump in and have some fun. What are the freest countries? People want to know.
Yeah, so in the emerging market space, right? This is not like talking about the world, all 165 ranked countries, but in the emerging market space, which is about 24 in the universe, Taiwan is the currently highest freedom weighted country, followed by South Korea, Chile, and Poland.
Chile,
so Chile and Poland,
interesting. Interesting to see Chile on there. How did that happen?
Yeah, so Chile and Poland are both pretty interesting because they're, very small weight in the market cap weighted indices, right? They're like about 1% in the MSCI Emerging Markets Index. And that's due to their freedom weight. So Chile's historically had very high economic freedom scores. They also have very high civil and political freedom. We've had concerns recently about the new government that's in place there because we expected that they would roll back some of the business-friendly policies that helped Chile become prosperous over the past decades. But we've seen that their institutions have proven strong because every time this new government comes in and tries to do anything, the voters come out in droves to vote it down. And so this new government hasn't been able to accomplish anything. And we saw something similar in Poland recently with their historic vote that basically brings them back on the path to, on the path of democracy versus kind of going down an autocratic path. And while their PIS government was in power in the past few years, their institutions also proved strong. And part of that checks and balances came from the EU. So the EU would come in and say, no, you can't roll back these judicial independence measures and so forth. So both of these countries kind of have shown us recently that the places that have stronger institutions, stronger rule of law, free and fair elections, have acted as a checks and balances on encroaching autocracy.
Talk to us about India. There's a question about India in the chat. We do a lot of work around India here. Not as free as people think, right?
Yeah, and you know what? I am personally very bullish on India. I think demographics is the biggest factor in a lot of ways in emerging markets because I'm from China and, I'm familiar with the one-child policy, which I'm a product of. And if people aren't familiar, this is a policy where you can only have one child over the past 30 years or so. And now they've gone to 2 children and 3 children because of this demographic time bomb that's on their hands due to mostly the one-child policy. There are 30 million missing women in China due to the one-child policy. And India has just surpassed China in population, which I think is very bullish. However, my personal opinion doesn't factor into the index at all because we are a passive, like an index tracking mechanism. So the country India is actually currently not in one of our included countries. It's not in the index currently. And sometimes it's in, sometimes it's out. It's a borderline country. I'm very conflicted because, the reason why it came out of the index a couple of years ago was because of its increased repressions on the Kashmir people, its increased interference in the media by the Modi government, and it blacked out internet in places that had farmers' protests. So these are things that concern us from a freedom perspective on the personal freedom side, but also on the economic freedom side. India has always historically been very protectionist in their trade policies. So these are the things that concern us about India. Now, we're just following the quantitative freedom scores. So if their freedom scores are relatively higher than at least half of the emerging markets in the universe, then they'll come back into the index. So we see these kind of borderline countries, India, Malaysia, Brazil, all borderline countries, Colombia, that sometimes are in, sometimes are out. And right now it's out, but we don't know what's going to happen in January at the rebalance. So.
So how
First, I want to talk about an interesting concept because you mentioned it, and I recently heard a podcast where they were talking about the exact same thing. Morgan Housel just came out with a book. He was on Tim Ferriss's podcast, and I was listening to that recently, and he was talking about how you can't just write a book. Write a book because it needs to be written, and the world cannot move on without that book there, right? And when Morgan Housel, who's legend, friend of ours, we got to get him on the show, by the way. Can you get him on the show, Spencer? Perth, you said the same thing about the ETF. This ETF has to exist, right? Like the world cannot move forward without this ETF in existence. And you were right, and it's been successful, but it boils down to it needs to exist. And when I heard Morgan Housel saying that, I was like, where have I heard that before?
Morgan said that too?
Yep.
That's awesome. Yeah, no, I was an advisor before this, and I grew up in both China and the US. And I personally didn't want to invest in China because I knew what was going on there. But a lot of my clients did, but I also had clients who, I was at Fidelity, and I had clients who said, I don't want to invest in Russia because I'm from Russia and it's like funding terrorism, and see how prescient that was now. So, Fidelity was very hard to leave, but I knew that, as I told you guys before, that this was something that had to exist. And I wanted to try to make it come alive in the marketplace, even though it could fail. The ETF marketplace is very unpredictable. I came in with no expectations because, a lot of ETFs don't make it. And so, but I was like, you know what, I'd rather try this and fail than have not tried at all, because it does need to exist. Because at the time there was nothing to where you could invest this way in the freer country set in the emerging market space. There was also
can you touch on that, because most ETFs are just bad ideas and shouldn't. Like, there was one ETF, I think it still exists, it's like an ETF of companies where the employees are the happiest. It's like the dumbest thing I've ever heard. So obviously something like that, it's not going to work.
I don't know about that one, but yeah,
no one else has heard of it either, to my point. But you got $600 million in assets. That's not nothing, right? Like, that's very, very impressive. Can you talk to us a little bit about what kind of reception you've gotten?
That's all thanks to our investors. Our investors resonated with this. They invested in this way. They got the word out. We've never had any wholesalers or any salespeople because, honestly, we couldn't afford it in the beginning. Now we can, but I'm not sure that we even at this point need wholesalers. I may, engage them at some point. But it's all just been kind of free media and word of mouth. And I think people just resonated with the idea, especially recently with, China and their crackdowns on the private market activities there. And, Russia and their market going to zero after the war. I think autocracy risk is top of mind. I mean, you don't know if the data is transparent or reliable in these countries for measuring, impact of your investments. You don't know if there's going to be expropriation at any point by the government. Yep. And, mostly these are companies that are in places that can't act in their own best interest. They have to put the interest of the state first. And that's just, you don't want to be subsidizing that kind of business. So, I think this is just something that investors resonated with. And when I came out with it, all I wanted to do was make it available, tell people that it exists. And then I knew that if people resonated with it, then, then the market would respond to it. So I'm just really grateful for the way that it works out.
But I got to tell you something, Perth. Just the reality of the matter is what you're doing is a great thing. What you're doing makes a lot of sense philosophically, morally, all of those things. But at the end of the day, people are going to invest in things because they're trying to make money, right? Yeah. And that's just the reality of the matter. And the best part of all of this is that that's exactly what this fund is doing. Can you throw up slide 4? You're outperforming everybody else, right? And, if people don't like it when I say this stuff, but this is the way the market works. Whether you like it or not, people are going to invest in things if they're going to make them money, not for moral reasons. Some people might, but the real value, what's going to drive things higher is performance, and you got it.
Yeah, I do. I think you need both. Like Perth is saying, you need an idea that resonates with people, makes sense. That that's attractive to most investors. Then you need the outperformance, and it's there. And that makes sense too. The freest markets should perform the best, right?
Yeah, I do want to say a caveat. Every time we talk about performance, please don't expect this every year. We've had some very extreme events, right? COVID and then the war. So now I have to
Perth,
say,
Perth has to say that. I could say anything I want. This thing's outperforming. It looks great.
but I will, on that front, we do see a lot of that outperformance coming from the freer countries as well. So Chile and Poland, like we talked about last year, Chile commodities trade. This year, Poland's
killing it.
So yeah, those freer allocations do help us. It's not just a China, ex Russia story.
Can you talk a little bit about the actual like the mechanics of the fund and market access challenges in running a fund like this and operating in countries like Malaysia, Indonesia, Philippines? Because maybe that's why this took so long for somebody to come out and start doing.
Because it's a pain in the neck.
Yeah,
right?
So emerging markets is a pain in the neck to run, and I'm actually very proud of the fact that we get into the local markets for our investors. So we have accounts open at each of these local markets, which very few investors are able to do, on their own. But that's one of the benefits of an ETF or a fund that invests in the emerging market space. So we cover that cost and that paying for investors to be getting access to the local shares in all of these markets. So our fund is about 80% local shares, 20% ADRs and GDRs. And so that gives a really good representation of each of the underlying markets, which is what we're trying to catch anyway. A shout out to Alpha Architect and the ETF Architect Group, who we use as our white label. And they're like, ninjas out there. They do an amazing job. Always accurate, always reliable, always doing the most efficient thing tax-wise for our investors. So those are the guys that run the operations of the fund.
In Philly? Are they in Philly?
They're in Philly.
What country? Not all people from Philly are bad people. See?
Exactly.
Which countries are the biggest pain in the ass to access? Can you say?
So actually, speaking of India, when we had it in the index, we actually have a methodology rule that says we only use ADRs in India because we just can't even mess with it. Taiwan, Brazil.
But you've got a lot of ADRs in India, at least. Other countries you don't. So, right.
Taiwan tougher than Malaysia or Indonesia?
I wouldn't say tougher. I'd say they're all pretty tough. But yeah, Taiwan does have some, it's very expensive to operate there because of their, the laws, and we have to have special tax accounting and things like that. So
you have to grease any hands to get into any of these markets.
No, we just pay up.
Which is basically that, but officially greasing.
Officially greasing it, yeah.
I see how that works.
Yeah,
I just wanted to give a shout out. We had the AUM chart up, and sometimes ideas can take several years to take hold, and really you can see it go parabolic really since the start of, I guess, early 2022, right, when Russia invaded Ukraine, right? And so you really see a parabolic growth there. And now, of course, there's the war in Ukraine, there's a war in Israel, and you can really just see the parabolic growth in this idea, right? So I just want to congrats to you, because sometimes ideas can take a while. So if you ever heard the phrase "an overnight success, years in the making," that's sort of like what this is, right?
That's exactly what this is, and you're seeing that parabolic movement, and because the war coincided with our 3-year anniversary of the ETF. The index existed 2 years before the ETF did, and I left Fidelity, years before that with this in the back of my mind, but left with the reason of staying home with my young child, but this was in the back of my mind the whole time. So it took a lot longer than what you even see.
Can you talk about the currencies? We're getting some questions on the currency. I'm very interested in myself, right? So you got a lot of different countries, a lot of different currencies, the dollar doing its thing, Poland doing its thing.
It's
very
really
strong, by the way, Poland currency wise lately too.
Yeah.
But anyway, how do you deal with that?
We don't currency hedge. We are in, like I said, the only thing that we kind of diminish on the currency risk side is we have one of the metrics of the 82, one of the variables is historical inflation. So we are in the countries that historically have less inflation. These are also the countries that, remember, have more stronger institutions, rule of law, checks and balances. So their central banks are not going to be are going to be less so kind of a government arm. So hopefully it does have a little more stability in their currency and in their inflation rates.
But it's really, to be clear, that's no different than the majority of these international ETFs. They're not taking either these iShares, MSCI country ETFs. You're taking the currency risk. And as an investor, I think most people would want it in most environments. So.
Yeah. And to hedge is just so expensive and so difficult to do. So I think for our investors, we isolate the freedom factor. So we don't have any other kind of currency hedge or any other factors on there.
I just want to say, Perth, that I go to a lot of ETF issuer websites, and yours is by far my favorite. A lot of them make you down. A lot of them, I'm serious. This, I don't know how much this means.
Praise, thank you.
Like,
show it.
A lot of them will make you download a file if you want to see all the holdings and bring it up right.
Well, you can download a file from the Freedom ETFs website that shows you all of the Freedom rankings. Right, Perth,
but you don't. Yeah, but you don't have to do that though. Here is kind of my point, right? A lot of them don't have
for this. Perth, do you get credit for this or Alpha Architects?
I'm gonna give Alpha Architect credit for this.
Okay.
They do the website. I do. I did. All the data is them. So that's all like compliance approved data. Like the compliance regulations say you have to have certain data on there. They put all that on there. The readability, all of that is, that's the Alpha Architect team. The design was ours, so we put the kind of design side on there. But I'll give them credit for that. That's they do a great job there, and they do that for all their funds, not just us.
Yeah, I don't know if I've seen this information so displayed so easily before, right? Or even the AUM history or price. I mean, that stuff you have to have, right? But it's just, it's.
This is something that all of their funds have on there. So that's them.
Where do you go to download the Freedom ranking file? I know I've done it before. I forget.
You mean the third-party metrics that we use?
Yeah.
So you can Google Cato Human Freedom Index, and that'll take you there. And this will have all the details on all 82 different variables, how the countries rank on 165 countries around the world. We take the emerging markets universe out of there. The reason why we use emerging markets only, or we started with the emerging markets, is because in the emerging markets, you have this huge spread in freedom levels, which doesn't exist in the developed markets. So that's where the opportunity lies. And that's where the, Freedom Alpha opportunity is. So we started with the emerging markets for that reason. But you can see all 165 countries that they rank if you go to the Cato's website.
It's really cool.
It's done by Cato Institute and Fraser Institute. And that's our input, the data input into our algorithm that comes out with the country weights. Yeah. It's a top-down approach.
We like that around here, Perth. And where are you located?
I'm in Houston.
I was just saying that Houston's my favorite part of Texas. I was literally just telling my mom.
Nobody says that ever.
Really?
You're the only one.
I like Houston. Maybe because I grew up in cities, so like some of the other places are boring for me. Like Houston's like a real city, maybe that's why.
It is a bigger city than, Dallas.
Like Dallas, Austin, Houston. I have a great time in Houston. We should talk online. I'm gonna hook you up with some of my Houston wine buddies.
Oh, nice.
Yeah, they all get together and they flex like who can bring the oldest Chardonnay, and you just hang out and drink great wine and let them flex all day. I'll hook you up.
Sounds awesome.
All right. Perth Hall, like I said, is the founder of Life and Liberty Indexes and the index provider and sponsor of the Freedom 100 ETF. All that information is in the description. Perth, thank you so much for coming on today.
Thanks for having me.
Thanks, Perth.
All right.
Thank you.
See, unlike these ESG clowns, she's out there fighting the good fight. I love to see this. Like, this is a fund you can really get behind. It makes sense, both morally and financially, right? Just forget the ESG shit. This is really nice to see that some people are actually coming out and launching some really quality funds for people, because I think this is a great option for investors. And I hope that she does more in the future. One thing I asked her when we had spoke about a month ago was, let's do frontier markets. We need some Vietnam, right? And It's just an access issue.
I was going to say, if this is hard, imagine, trying to get some stocks. The Bank of Kazakhstan is not exactly the most liquid of assets.
But we don't.
Not yet.
See,
Not
and
yet.
when we were doing like the documentary stuff last week, I was kind of saying this to Spencer, like we take for granted so much in the US. What beautiful access we have to the most sophisticated, most liquid, most trusted markets in the world. It's just not like that in other places. So we could sit around and be like, how come I can't, invest in Vietnam easier? Because it's really freaking hard to invest in Vietnam.
What's interesting is that the country that is the biggest pain in the ass to access happens to be the one with the most ADRs in the United States. So like they made a rule in the ETF that it's ADRs only.
Yeah.
Like how many ADRs are from India? Like a ton.
See, dude, India has.
What's your guess? How many Indian ADRs do you think there are?
There's a ton. India's very big.
Like 25 or 30 probably?
Probably more, no?
There's probably more ADRs from China.
Well, there's definitely more in China. There's definitely more in China, but also a reason for that access, right?
Yeah. Well, yeah.
China and India, my whole life have been the big growth stories, the big bulled up countries around the world that you just have to have a piece of. I both of them have major issues for investing over the long term. There's a reason why they are not in her fund.
I'm getting mixed signals. I'm getting word from the peanut gallery that there are only 10 ADRs, but then Nippon says 20 to 25. I'm going to trust the Indian guy versus the Venezuelan guy. What do you think?
Can I just say,
all right.
Shoy Lu,
I mean, for this topic, I love you, Fonz, but
what's
the name is
going
not
on?
Nippon.
I don't know what's going on in the chat, but Shoy Lu, I think, has successfully confused everyone about currency risk for these ETFs. Cool. Do we want to just touch on this real quick, JC?
Yeah.
Typically, and you would call them US dollar denominated funds. A US dollar denominated fund is still investing via local currency in other markets. You're just buying it in US dollars. You are taking on the currency risk, and you will do better in a situation where the US dollar is weaker, not stronger, because you're basically invested in the other currencies against the dollar.
Because the companies you're buying do business in that currency.
Yeah, and their stocks are priced in that currency.
Right. Okay.
On the other side of the equation, we do have a select handful of good currency hedged ETFs, and all they're doing is hedging out that local currency risk. So you're only getting the gains and losses on the stocks themselves and not the change in the currency, right? But those are more rare. Most international funds that you buy, you are also investing in the local currencies of that fund. So you are shorting dollars in a way. Did I do that? Did I do that?
Yeah.
Can we just talk about the performance?
That was great.
Can we talk about the performance? I mean, this is here. I want to give you guys. I want to just throw this up here, just to throw the performance one more time. I added the Vanguard one, so this one's a little bit more. This one has a little bit more data. Here, look at the performance. This is the all-time performance. Man, very, very impressive. Very impressive.
I don't just go up to New York for anything, Rachel.
Look at that. You see?
I don't have time for that.
Yeah.
I mean, very impressive. The VWO, I'm not sure. I don't have the weightings in front of me. My suspicion is it has less China than EEM. But man, what a tremendous outperformance. Good for her. Good for her.
So isn't this just a way of saying that China stinks, right? That's what this chart says.
Communism stinks, Spencer.
Yeah.
This is
America.
Okay.
But did you guys notice what a diplomat she is? It's autocratic regimes, autocracies.
Yeah.
We don't need to.
Also, I want to get back to my earlier point. I haven't finished the Tim Ferriss, Morgan Housel podcast yet. I'm gonna do a 4-mile run later today, Spencer.
Okay.
And I'm gonna be listening to that. I heard the beginning of it, and it was funny because Morgan was like, if you just write a blog post because you have to write a blog post, it's gonna be crap. Don't just write a book to write a book. It's gonna be crap. Write a book because the world can't exist without that book being printed, and when he said that, and Morgan Housel, you know how I feel about him. He's the fucking man. And when I heard him say that, I was like, where have I heard this before? Perth told us the exact same thing a month ago about her ETF. Like, it resonated so much with me. The world cannot move forward without this in existence. I love that mentality.
Yeah, I'll bet.
I'm not a book on an audio book or a podcast listener while I run. I need music to get me going, keep me going. I can't
over music. Music is for the charts.
I'm over music.
Oh, okay. You're over music?
I rarely listen to music.
Okay.
You rarely listen to music? That's not good, bro. What do you listen to when you're having dinner? What do you do? What do you have on?
Nothing.
Bloomberg,
it's just silence while you're having dinner.
Bloomberg.
Yeah. No, we talk.
You eat dinner in silence.
We're talking to each other like humans. We don't need.
You don't have some music in the background, bro?
Sometimes she'll play stuff. Yeah, Rose will play stuff, but I really don't.
And what about you, Spencer?
We don't listen to music during meal time? No. Maybe we should start. I don't know if you say it's a good. I don't know.
I mean, I feel like I've been doing that forever. You throw on some tunes, do a little cooking, pour yourself a glass of wine, little how you doing,
No, I'm a podcast guy for cooking. While I cook is podcast time. Chores is prime podcast time right there. Cleaning is podcast time.
Yeah, I'm with Spencer. A lot of podcasts. There's just too many to listen to these days. Sometimes I'll like have like a craving for like some Bob Dylan or Warren Zevon, but it's rare. It's really rare. When I'm in the car, when I'm driving, I'm trying to get a podcast on too. Yeah.
I'm a podcast audiobook guy during exercising and long drives. Like if I got to drive down to DC or Baltimore or wherever, I don't really go many places these days alone.
I do love Morgan Housel. He has a podcast actually, and whenever I have to go on long drives with the wife and she wants to go to sleep, I'll just pop on his podcast because I like it and she just fall asleep to it. So it works. It works for us.
There's zero chance my wife would allow us to listen to a podcast in the car. Zero.
All right. Okay. Moving on.
Podcast on. Yeah. The other thing too is when you're working, JC. How about you? Because you're usually writing, right? I can't listen to music with lyrics when I'm working.
Yeah. It depends. It depends because if it's 90s hip hop that I know the words to every song, then it's fine. I can't listen to new music where I'm like paying attention, be like, oh, I like this song.
Right.
Like it needs to be like 93 Tribe Called Quest.
Got
or
it.
like DMX in 98. Like it's got to be songs that I've heard 10 million times.
Hot Sex on a Platter.
Something like that.
I exclusively listen to music from movies, cinema scores. That's what I 99.9% of the time listen to during the day.
Wow, I've never heard anybody say that.
Oh yeah, gave me some Hans Zimmer
cinema scores.
Gave me some Hans Zimmer. Give me some John Williams. Oh gosh, what's the guy who died? James Horner. Give me some James Horner. Give me all that every day. Moving on. Come on, we're getting way off topic here.
The Succession theme song does pump me up, though, Riley.
Okay.
All right. Next.
All right. Earnings. We got a shit ton today.
So many.
Let's start Shopify. Okay. Shopify had a good
have a
report.
bumper. We don't have an earnings bumper.
Right. Yeah. We do fine.
Do your job.
All right, we'll start in order of importance, I guess. Shopify is pretty important as far as tech goes. Darling of the pandemic, beat a beat and good guidance, and we're up about 17% here this morning, pre-market. So nice here for Shop.
This thing's going to 80.
Dude, this thing's going back to the hundreds. I love this stock. Bought it last year. I'm buying more right here today. Up 15%. Happy to buy it. You have
Ottawa, from Ottawa, Canada, eh?
Yeah. Canada's one tech stock. You have this base breakout level. You had a beautiful retest of it. Look, Shopify's been crushed over the past few months. This was one of the leaders off the lows last year, but it hasn't been good since this summer. Giving buyers another chance to get in. I love this one long term. Next.
Next. Okay. Remember yesterday we were talking about luxury goods and how bad they are? Well, Elf Beauty says, hold my makeup because they absolutely crushed it. Their report blew it away. Their guidance they raised their guidance. They just knocked it out of the park. What are we up this morning? Only 14%. Okay. I think it was up more than that earlier.
115 is the big level there. We're at 107, so we're still below that overhead supply, but this trend is serious, man. These beauty products, man, I don't know what's going on. I don't buy beauty products, but man, these women, there's good money in selling these beauty products to these women, man. It's a racket. Good for them.
Some of these stocks, their charts literally look like they're out here curing cancer, but they're selling makeup. It's amazing.
Yeah.
Good for them.
Good for them.
Can we do Palantir because this is a nice one?
Yeah. All right. This is interesting for me personally.
Think about it. The wedding stuff for the women is a racket. All the baby stuff, racket. The beauty, racket. Like, if you could find something, the Spanx, right? What's the thing? The tight thing?
Yeah.
If you can appeal to that mother woman audience somehow with a product, like clearly that is a
not entirely true because that's what Pinterest is, right? So Pinterest is for that.
I
group.
use Pinterest.
Rachel out here listening to the Palantir call. You go, girl. Listen, Palantir is another one like Shopify. Own it in the long-term account. Love this company. Love what they do. Most people don't understand or know what they do. They're very secretive. Love that about them. This is on the cutting edge of AI. This is an AI stock, very much a part of that theme. They've been working on their AI technology for 10 years now. These guys are very much in it and are an industry leader in it.
Okay, I bought Palantir 2 weeks ago. I made my money back this morning. In one morning, I made all of it back.
Let it go, man. Let it run.
Do I let it run?
The base is in.
Right.
The reversal is in. Yeah.
All right. Looks
what I like about this is all the conspiracy theories that people hated and stuff like that. I love that in a stock. Like, people hate Elon Musk and people hate, where there's real, like, there's reasons why people are selling that has nothing to do with the stock. Like, I love that.
People don't own this one because of politics. That's great. Give me more.
JC, you probably loved Wayfair a few years ago. Do you remember that conspiracy?
I do not.
Wayfair?
Tell me.
Oh, Wayfair was involved in child trafficking in their cabinets. This is an actual thing. This was a real thing.
Wow. That's terrible.
No, it's not true. It's not true. It was a conspiracy. It was not true. Sorry, I should have clarified that. And it moved the stock. Look it up. It happened a couple years ago. Okay.
Just the earnings update on Pinterest. That move from the other day, from that beat, more than stuck, getting follow through. Very viable base in Pinterest right here. What's next?
Let's do Roku. Out last night as well. Still losing money. Sales came in higher than estimates. Active accounts are growing. Revenue looked like it was good. What did I haven't? Oh, wow! Actually, I didn't realize we're up 19% this morning. Whew, okay.
I would love to hear from the chat. Does anybody use this crap product?
You took the words right out of my mouth, Strazza. Who uses this shit?
This is just
I used it for. I had a Roku TV for years. I don't have it anymore. It really got.
I had one like honestly. I had one like 12, 15 years ago.
Dude.
It was recently, but it got slow. Like over time, it just got really, really slow, and I couldn't even use it anymore. So it's gone.
Are we overdoing the politics with stocks like Budweiser and Target? Like, can we just leave these guys alone? Like, they didn't mean to put a transgender bathing suit in their store. I just kind of hate, like, I don't know why this is such a big story, Spencer.
Wait, what? Wait. What are we talking about?
Target stuff with the LGBT stuff.
Wait, we're talking about Target now? Okay.
Yeah, I'm just looking
Speaking of Target, I didn't know this was even allowed, but the CEO went on CNBC this morning. They report earnings like in 2 weeks.
Dude, they're allowed to talk. They're allowed to
they're not allowed to talk about the company's performance, and he kind of He kind of did in a way. He he lowered the bar. He lowered expectations, right?
Well, he talks about a weak consumer.
Yeah. So anyway, all right. Well, whatever. Is Target even reacting to that?
But anyway, these stocks are just getting killed for, I guess, wading a little bit too far into the political environment. But for Budweiser, it truly has affected the company's sales in a big way. Is that now the case with Target? Like, are people really like, I'm not going to shop at Target?
I think it's important to understand who your audience is, and you probably don't want to piss off your audience. So clearly, the people who are drinking Budweiser are not liberal transgenders. They're probably more conservative, Trumpers or whatever. And I guess Anheuser-Busch, it's not even an American company anymore. It's now a European company. I guess they didn't get the memo of who their audience is.
That's what people should have been mad about.
Well, yeah, well, whatever. Either way, even me a couple of times. I mean, I don't really care, and I don't drink beer, but when I do drink a beer, I drink Bud Light, right. So I was at a bar with a bunch of Republicans, and they're oh, you're ordering a Budweiser? I'm like, yeah, and it took me too long to figure out why they were questioning it. And then another time, I was at my wife's cousin's house, and her husband was like, you can have the rest of those. I just have them because we had them from before. People twice in a few months. It's crazy. That actually happened. Because I don't think that way. I really don't give a shit.
I thought you didn't drink beer.
I don't.
He's the Dos Equis guy. Can we get the Dos Equis guy? I don't normally drink beer
to stay sober. I drink beer to stay sober. If I'm gonna have if I'm gonna be drinking for a long time or whatever, I'll drink a beer. I'm not gonna if I'm going to a happy hour with you guys and it's 4:00, I'm not gonna have a double Jameson on the rocks. I'll be dead by the time we go to dinner. So I'm gonna have a beer.
He's the most interesting man in the world. And when he does drink beer, he drinks Mick Ultras.
Well, on the golf course, I do.
All right. Steve, you wanted to talk about the builders. We had a few of those. We had TT, BLDR, Martin Marietta, MLM, which is my favorite ticker, actually.
MLM? Look at this candle in Train Technologies. Having not just its best single day performance in 15 years since great financial crisis times, also its best weekly performance shaping up for. Just knock the socks off of earnings. What's interesting about these building products companies, they all report around the same time. These three, I think, Train, MLM, and whatever the third one was that I mentioned in the chat yesterday. They all came out report nice numbers, but I think even more so it was the read from the Fed, right? Because the home builders and these building products companies just went bonkers yesterday. And frankly, Powell did come out and say, listen, with mortgage rates at 8%, housing's going to get hit a little bit, and we're aware of that, and we're also aware of the lag effect. So we're kind of waiting for it to flow through. We don't want to crush real estate. So I think there was kind of a Fed impact plus 3 hot earnings beats coming out. This space, home building, construction, building materials, this space is just so red hot right now. I think the dip in home builders over the past couple months is just super viable here.
This is a 50, by the way, Strazza, this is a $50 billion company. This isn't
Yeah. Train Tech. You've seen the signs. Train.
Have I?
Yeah, they're out there. It's a thing. Sure.
I never have, but okay.
Speaking of Fed, what BLDR is the ticker?
Yeah, BLDR, Builder First, whatever.
Yeah.
The uptrend in this stock, I mean, forever now. Yikes. These stocks look really good at this point. And then the whole space kind of had its best day in a long time. We use the ETF PKB because it doesn't include just the homies, but it also includes all of these building products and materials companies.
Speaking of Fed, gotta give John Netto some props.
He's so good
on his call yesterday. Yep. He was on our show and he said you gotta watch out if the Fed says anything about tighter financial conditions. And what happened? They added the word. What was the phrase? They added to their statement. It used to say tighter credit conditions for households, and now it says tighter financial and credit conditions for households and businesses. So, that rates acting as a de facto rate hike And there you go. But they did say they're not lowering rates anytime soon, or at least that's what they said yesterday. So
I always listen to Powell, and JC always makes fun of me for always listening to Powell. And usually I'll listen to the whole hour-long presser.
Is Powell still the guy? I thought it was Yellen.
Yeah, and he looks.
Oh, come on.
Did anybody notice? Like, he looks like I don't know.
Dude, this job ages you. This job ages you. It's not a fun job.
He looks like it's peak interest rates. You can kind of see it on his face. But I did, after listening to yesterday's, I only understand so much, but it had a dovish tone to me. Like, at one point he said, for a long time, we were worried that we weren't going to do enough, right? And the risk to us was that we weren't going to hike enough. And now we're kind of shifting to, a new situation where we're kind of worried about doing too much, right? So like that dovishness is slowly creeping in to the commentary.
Hold on, where does one even? Is there like a podcast channel or like an app where you listen to the Fed? Like how does one listen to this?
Literally
you can watch it on the website.
They're streaming it live on Twitter Spaces. It's on YouTube. All these government press conferences are actually they do a good job with YouTube channels. The government.
Is it on C-SPAN? Does that still exist?
It's probably on C. I used to watch C-SPAN in college.
Why hating on C-SPAN?
I'm just asking if it still exists. I'm not hating on it.
There was a
of course it still exists.
When I was in college where I wanted to be like a public relations person. Public policy.
That sounds terrible. I think you made the right choice.
You could study public policy in school.
All right.
You can do a lot of things in school.
I'm just saying. Marine biology.
We're gonna bring Sean on in a second here.
Biology.
Wait, what else was on the list here? Shout out to very rare thing happened yesterday. We had a midday merger announcement. This is pretty rare, but it happened. Six
M&A.
Flags and some midday M&A action. Six Flags and Cedar Point, and Fun are merging. It's a merger of equals. You see the charts look identical.
So what do they own? What are their brands and properties? Fun.
Cedar Point.
What the hell is that?
Oh, it's like the biggest amusement park in the Midwest. It's in Ohio.
I wouldn't know. Okay.
Yeah. Okay. So it's a merger of equals. If you own Fun, you'll get 1 share of the new company. If you own 6, you'll get 0.58 shares of the new company for every share you own.
Whose ticker symbol should they take?
They are taking the Fun symbol, but they're doing business under the Six Flags name. So Six Flags brand, Fun ticker.
That makes sense because I've never heard of this Cedar whatever. Everybody knows what Six Flags is, and Fun is a great ticker. All right,
great ticker.
Yeah. Sorry, Mary. Also, a big thing's going on with these Treasury auctions, guys. Are you paying attention to this? A lot of smart bond people talking about the supply of Treasuries.
Yeah.
Right. So they release these numbers every so often and ultimately tell you how many new Treasuries they're issuing and putting on the market, right? And it's like any other market, it's driven by supply and demand. If you have a ton of new Treasuries, then you need a ton of new buyers. And if the buyers aren't there, then the price of the bonds will fall and interest rates will rise. So they were coming out with like 160 billion in new issuances over the past month or so. And that had a lot to do with driving interest rates higher. Now, yesterday, they just announced like a $10 billion issuance, just, pennies compared to what they were offering weeks prior. And now a lot of smart bond people are coming out here and saying it's just supply and demand, people. They're not issuing as many treasuries. You're going to see that pressure come off interest rates. Maybe bond prices could actually start rising for the first time in a long time. What do you think about that hot take? Supply and demand.
It's a thing. It drives the prices of assets, and it drives the prices of like salaries and stuff like that. Like, why do you think the nurses and teachers are so underpaid? It's because there's a zillion of them looking for those jobs. So, right?
I think we're going to continue to see more and more layoffs, guys. The unemployment rate is starting to tick up in a meaningful way. So is 2s10s. They typically
good. Unemployment's way too low.
Yeah, I agree.
Yeah, that's a good thing for the economy. Look at me talking about economics. Oh, come on.
Hold on. Is it JC? when the unemployment rate rises, it's typically synonymous with a recession.
No, low unemployment like this is actually very inflationary, which is not a good thing for the market. And if unemployment starts to increase, you're actually going to get people doing the jobs that they don't want to do. It's not that people can't find jobs, it's that they don't want to be a janitor. They want to be an accountant or whatever, but they're not going to be, right? Like, it's a good thing for unemployment. The fact that there's 2 jobs available for every one person looking for it is not a good thing.
I'm just saying, historically, when you do have that end of a downtrend in the unemployment rate and it bottoms and starts moving higher, we're talking about recessionary periods. I hear you.
Recessions are a choice for a lot of us. And the unemployment rate is way too low.
Recessions are a choice. I love that quote. That's fantastic.
It's true for a lot of us, not for the entire population, but for a lot of us, recessions are a choice. You can either participate or not.
Yeah. I wanted to, speaking of the jobs thing. Oh man, can I open this? I saw a picture last week. I just found it again. It was an ad for a job ad to manage a car wash at Buc-ee's. To be the GM of a car wash, they will pay you anywhere from $150 to $225 grand per year, with a 6% 401k match and 3 weeks of PTO. So manage a car wash, people. It's a good job, apparently. No.
You should see what McDonald's managers get paid down here in the Florida Keys. It's insane.
Can we hit that hot corner, because they're buying more regional banks, bro? Brian Daniels, another Form 4, 1.5 million on Fifth Third. Come on,
we have
Strazza.
so much more important earnings to talk about. You really want to go to the hot corner?
And we have Sean waiting here in the wings, so I don't even know what to do right now. We're running out of time.
Hit the hot corner quick. Bring in Shawnee.
Okay.
I just want, come on, more regional banks, Strazza.
Okay, hot corner and Sean.
We got to talk about Lilly before we finish today. Please. Go, run it.
Hot corner. So hot right now.
All right, JC's excited about the Fifth Third Bank Corp. This guy keeps coming out and buying stock. The regional banks have been very popular among corporate insiders for 2 quarters now. Some others that stand out: Greenbrier. Decent size purchase. This is a railroad stock. And then there's another bank, Byline Bancorp, BY. And that's not from an exec. That looks like, oh no, it might be. Sometimes they buy and put it in like their LLC. That's what it looks like. That probably is a small purchase.
How about the CEO and president of ABR, mortgage REIT, putting up $1 million?
Yeah.
Not nothing.
Just it's really tough environment to want to get excited about REITs.
Listen, he's excited. I'm just saying, they're buying regionals, right? They're buying REITs. It's interesting. It's interesting.
Yep.
Yeah, for sure.
The third stands out for sure. That's all.
Spencer, quickly before we get into the Eli Lilly, can you just drop the link from last night? People are interested in my thoughts on things, and all the questions have been answered yesterday.
I'll drop it now and then again at the end. There is the link to get the replay to last night's conference call. Should I bring options Sean McLaughlin here?
Please.
He's been waiting very patiently. Thank you, Sean. I know we're all over the place. What?
There's so much to talk about. I want to talk about solar stocks too.
Why is that banner there? That's weird. Let me get that off.
Enphase falls like another 10% every day. This was an old leader. Solar stocks, like as an industry, are just uninvestable right now. I mean, SolarEdge reported their earnings yesterday. Their guide, the street was expecting 700 million. They guided 300. That is so bad. Like they're just like bombing earnings. I think there's going to be another just total washout in the solar space before these companies are investable again. When the government removes those subsidies, removes that support, bottom just falls out.
Biden administration, the clean energy stocks do terrible. The dirtiest companies in the world do the best. Funny how that works.
Here we go.
Yeah, coin is tonight.
Shawnee, baby. Why don't you unmute yourself, huh? First timer?
Well, I was unmuted about 20 minutes ago when I was supposed to be on, but sorry.
All good, all good. Hey, listen, Curtis has a good question on the significance of the 25 delta. Why we're looking for that. I know you've told me a million times, but why don't you tell Mr. Curtis Taylor?
I've heard of this.
Well, first of all, there's no magic in 25 delta. I tend to
Little
land
magic.
at the 25 delta when I'm looking to buy options because for me, I feel like a 25 delta option gives me a nice balance between affordability because it's out of the money, it's a little bit cheaper, therefore leverage, right? And if I'm wrong, it's not that big of a hit, right? I didn't invest a whole lot of money. So I want the leverage when I'm right. That's really the point. Like if I buy an at the money call, nothing wrong with that. You're paying a little bit more. You're gonna have a little bit more of a theta drag, but you have a higher probability of winning, right, with a at the money call. But if I'm putting on a directional bet and I'm buying 25 delta calls, it's because I think a big move is coming and I want to be leveraged into it at the most affordable price. Again, nothing magic about 25. I could have chose a 20 delta. I could have chose a 30 delta. But 25 just kind of feels like the sweet spot for me.
It's a lifestyle for me, folks. It's a lifestyle. We want to be able to sleep at night knowing that we have enough exposure, but not too much, right, Sean? Because you could lose sleep both ways. Like I'm not in enough. I don't have enough. I'm going to miss it. But also I'm in too big. I'm too big. Right? So that sweet spot, I like it. It's a lifestyle, Shawnee.
You could think of it that way. Yes, correct.
When you, to quote the great philosopher, Dr. Phil Perlman, whenever you think like that the world's about to end, go for a walk.
I appreciate the Zen turn that Dr. Phil Perlman has taken over the past decade. I've had the pleasure of knowing Phil since 2009 is when I first met him, and the Phil Perlman arc has been a pleasure to watch.
Remember he used to chew on potato chips in your ear, right? We've come a long way.
I don't even want to think about it. Hey, so let's talk about Procter and Gamble. Can we talk about that?
Yeah, Fed's behind
Your
this.
ass.
What are we doing?
So,
what did we do? Why don't you, more importantly, right, Shawnee?
Well, we haven't done anything yet, but I want to point out that
You might not have.
I'm happy that I waited. My penalty, if you want to call it that, for waiting till after the Fed is only about 15 cents. I can sell that spread now. So maybe I should back up. People that have no idea what we're talking about. Yesterday we had a little internal debate about putting on some credit spreads, selling some delta neutral credit spreads because we still think the markets are a little sloppy here. And I wanted to get into a consumer staples name. The guys brought up Procter and Gamble as a good candidate.
Why, Sean? Why consumer staples?
Because that was one of the sectors that had some of the highest implied volatility across the board of all the ETF sectors that I track. So that's kind of where I started.
And to be clear, relative to itself, not relative to others, right? Because the question is how, crazy consumer staples are the highest volatility. Well, relative to itself over time.
Correct. So it started there. And then I asked you guys for some names in that space that looked like that might be going a little sideways. Procter and Gamble came up. We all agreed that Procter and Gamble is a good candidate. JC wanted to sell the strangle yesterday ahead of the Fed, and me and Strazza were like, why don't we wait it out a little bit? You never know what's going to happen. Let's let things shake out. And, I generally don't like positioning immediately ahead of the Fed announcements. And so at the time when we were talking, you've got the price right there. We could have sold that strangle yesterday for $1.80. These are December options, selling the 155 calls and the 140 puts. We could have sold it for $1.80, which, by the way, those deltas at the time, or those strikes at the time, were approximately 25 delta. There's that 25 delta lifestyle. That's another area where 25 delta comes into play. Well, I urged caution. I said, look, let's let the Fed shake out. If we wait till tomorrow, assuming the world doesn't blow up, we could probably still put the strangle on for a little bit cheaper, no big deal, and I'll feel a lot better about it. Well, today I'm looking at it right now. I could sell that strangle for about $1.62, $1.63. Cost me 17 cents to sleep better at night, JC. So I feel good about that. I'm going to put this trade on today. And if you put it on yesterday, $1.80, good for you. Congrats. I think we could both win here.
What was that? What was that song? I ain't never scared. I ain't never scared. What's that rap song? I know Sean doesn't listen to hip hop.
You're asking the wrong guy.
I know. I'm not. I wasn't asking you. No, I mean, listen. It was a calculated. It was. Sean tends to lean a little more conservative. Strazza tends to lean a little bit more aggressive. I tend to be somewhere in the middle. Yesterday, Sean and Strazza were both on the same page in terms of conservative. I was like, nah, put it on, baby. First of all, another reason why we're looking at Procter and Gamble is that I threw out the question, what is the messiest? It was Bone Crusher. Nice. Thanks,
Yes.
baby. Sean, not a fan of Mr. Crusher. We were looking for the messiest stock we could find. And, without Strazza saying it, I'm thinking materials in the back of my head. Strazza goes, materials. I'm like, I know. Besides materials. And consumer staples were certainly that. Sean pointed out how consumer staples implied volatility was elevated compared to other sectors. And Procter and Gamble was super messy. We were also looking at Costco, right? There was another one we were looking at. There was a few staples we were looking at, but I think we all agreed Procter and Gamble, this is one hot mess. And that's exactly what we were looking for.
That's exactly what we're looking for. Those are the types of trades we want to be in. Look, the market's reaction following the Fed yesterday and following through this morning is wow, what a move. Honestly, I didn't see this move coming. But I feel like it adds more confusion to me than anything. I feel like the market's still just, man, I believe me, I want to start putting directional bets on, but I just have zero confidence in anything. So that's why I've been selling premium, and that's what's working. We took a bunch of straddles off yesterday that worked, but those are the only things that have been consistently working for me right now.
It's a bull market.
I'm not going to say that yet. No,
I'm happy to. It's been a bull market. The bull market started last summer. So we're now on month, I don't know, check my math, month 17 of this bull market. And one funny thing that I feel like people forget, go back and study every bull market in history. You know what you're going to find? Sometimes you have a few months where those bull markets correct. It's wild.
Nobody's coming out here saying it's not still a bull market. It's just
yes, they are.
Not me.
Oh, no one's talking about you.
Oh, I thought this was about me.
No, first of all, it's not always about you. All right. Okay. Settle down there. All right. There are other people in this world.
Okay.
And a lot of other people, according to my data, think it's a bear market, which is hilarious.
Small caps think it's a bear market. So
the least important, least relevant companies on the planet, those?
How many of them are in the NYSE internal data that you keep talking about?
How many small caps? It's a good question. That's a good question. Why don't we break it down? It's a good question.
The overwhelming majority.
Are small caps?
Yeah.
How many stocks are in the New York Stock Exchange? It's like 1,200?
No, like 3,000, dude.
No.
NYSE?
No. Stocks only. Stocks only. It's less than 2,000.
2,800 companies.
Boom.
I don't think that's right.
Where are you getting that data?
Yeah, where are you getting that data? I don't necessarily know that that's right. Because remember, there's a lot of stuff on the New York Stock Exchange that's not a stock.
As of March, it was 2,300. About
23. That sounds right. I think that's right.
Yeah. Okay. So,
and what's the percentage that are not American? It's almost half, right?
I don't know.
Yeah, I don't know.
I think it's close to half of the stocks in the New York are not from America.
The big problem with not looking at the common stock only is you got all these like trash bond funds and inverse leverage this, leverage that, trash funds. And if you're looking at internals and including those, what a mistake.
Yeah. And by the way, you also have a lot of funds that are not trash, but they're not stocks, right? Like you have good closed-end funds there too, by the way. It's not just all garbage. It is the New York Stock Exchange after all. This isn't the NASDAQ.
The point of analyzing market internals is to look at what stocks are doing beneath the surface. And if you're looking at all these funds and not stocks, you're not getting the right information. That you're
kind of like looking at the market internals of the dollar, right? If you're only looking at the euro, you're not getting a good sense of what's happening in the dollar, right? Strazza, tell them.
I care what the dollar index is doing. That's what most people care about. Again,
most people are bad at this.
Thai bots don't matter. I will die on that hill. They don't matter.
Well, they matter to me.
Malaysia. What is it, Sean? Malaysia. Ringgits.
Did you guys keep all the currencies from all the countries you visited?
I've got a ton of random currencies
from 7 different countries.
Yeah,
because I'm like moving tomorrow, so I'm packing up and cleaning all this stuff, and I found some zlotys that I didn't even remember that I had.
Is that
from Polish zlotys?
Yeah, from years and years and years ago.
Dude, the Polish zloty has looked great. Is that another currency we shouldn't care about, Strazza? Or are you just hating on Thai bot?
We got 2 minutes. Give me 30 seconds here. Eli Lilly. Eli Lilly, because Spencer apparently doesn't want to cover like the biggest earnings report of the day. Eli Lilly absolutely crushed it, top and bottom line. Their guidance was shit. They lowered their guidance. They have miracle drug, and they're lowering guidance. Pay attention, people. Pay attention.
They lowered part of their guidance. They lowered their earnings guidance.
Because you see, if you're no longer fat, you don't need fat pills anymore.
They're
right?
They lowered their earnings guidance. They maintained their revenue guidance. Okay,
classic low ball.
Sean, I like selling the 600s here. Remember, we said that after earnings, we were going to take a look. Today is officially November 2nd. My alarm is going off. Can you, what do those 600s look like? Let's sell the shit out of them.
You can do it. That's a no trade for me. What month do you look at? December?
That's about right.
You could sell the 600s for about $16 right now.
Wow.
Maybe $15.75.
So
wow.
Riley's in the chat. Riley's in the chat talking about like derivative GLP-1 plays. The problem with this is it's all, if you're just getting to like investing in these GLPs now, you're too late. There's nothing there. And also, if these drugs don't work, I mean, these are just traps, all of them. And they make you saggy skinny. So I think once people realize that,
not a reason.
Saggy skinny.
What about the 630s? How much are we getting for the December 630s, Shawnee?
About $7.
That doesn't suck either. But the margin requirement's going to be big on those, huh?
You're looking at, I mean, every broker's different, but you're looking at about $6,500 per contract.
Don't buy Novo Nordisk because Wegovy gives you saggy skin. That's apparently
JC. If you are bearish on Lilly, which look,
I am not.
I am. Okay. Well, you know, selling calls is a bearish bet, right?
Actually, I would check that. It could also be a neutral bet.
Well, it's a conservatively bearish bet.
It's not bearish. I don't think it goes down. I just don't think it goes up.
All right. Well, I would be more interested in buying puts if I wanted to express a bearish bet here, but
right.
Yeah,
but I'm not
selling calls on this thing
for the fourth time. I'm not bearish.
Gotcha. Either way, I disagree with you. I'm not selling calls on this thing.
When this stock
starts
falling, Sean, we will sell puts in it. Let's let it start. Let's let it peak and roll over. Then we'll sell puts all day in it.
I'm not trying to sell puts. I'm trying to sell calls, bro.
Okay. Enphase, real quick. There's a question about Enphase. Like the current earnings came in okay. The problem with these solar stocks, we see it one after the next after the next. I took notes on this one. Enphase's guide. The street was expecting 106 million in EBIT next quarter. They guided 6 million. That's what's going on with these solar stocks. Their revenue estimates came in 43% lower than where the street was. Like they are just blowing up their guidance. There's nothing.
I have a few things for recess. So let's do the running real fast, then we can get out of here.
Hit it. First of all, you don't need pills to. You could just exercise and eat healthy.
Rest in peace
really not
to
that hard.
Mint. Rest in peace to Mint. Sorry. The personal finance app is getting shut down. If you use Mint, sorry, it's over. Intuit bought them a while back. That's my first thing. Second thing is congratulations to the Dallas Cowboys. As of last night, they are the major pro sports team in Texas with the longest championship drought. Good for you. Also, quick thing. I got a phone call. So yesterday I had to take my car into the shop for just a quick recall thing. So he calls me like an hour ago. He says your car is ready to get picked up, but your car has swollen lug nuts. I can replace them for $90. I said, no, I've never heard of swollen lug nuts before. Someone help me out in the chat. Are swollen nuts on your car? Is that a thing? Do I need to get new nuts on my car?
That sounds like you're driving that car to the wrong part of town, brother.
You say swollen nuts?
Swollen lug nuts, yes. Is that a thing? Or should I just ignore what he said? I ignored it, but
what
I don't
part
know.
of New Jersey are you driving through, bro? The red light district of Hoboken?
The northern part.
Hoboken has a red light district? I didn't see that.
My car does not need Ozempic. My car is fine. Thank you very much. Okay, I'm done. Everyone else go.
Can I just give a shout out? Rest in peace, Bobby Knight. We can yell out Bobby Knight quotes all night long. He brought a lot of joy to me and many others over many years.
He died.
The key.
Yeah.
Wow.
The key is not the will to win. Everybody has that. It is the will to prepare to win that is important. And that resonates with me so much. To my earlier point, people just want to look at the indexes and they think that that's a good tell of the market. They don't want to put in the work and see what's happening underneath the surface. Good. Screw them.
That sound you hear is every chair in Assembly Hall breathing a giant sigh of relief. Okay.
I see what you did there. I see what you did.
We've been sitting on that one.
No, I'm not. Okay, it's Thursday. We have Options Jam session with Sean at noon. Chart request live at 1. We will be filming a part of the price action later today that'll go out tomorrow. I'll be out for tomorrow, everyone. I am moving, so the rest of yous be good while I'm gone. Try not to destroy things too much. And if I don't see you, go make some money. Have it going, all right?
Spencer, use your legs when you lift boxes. Don't use your back. Use your legs.
Me, man.
Pro tip.
Right.
That's a pro tip.
Pro tip.
All right. See you guys.
Adios.
Run it. I can't take no loss. I don't even know what